What if everything you've been told about America's decline isn't just wrong, but deliberately upside down? What if America isn't collapsing at all? What if it's quietly becoming untouchable? Here's the question. No one on Wall Street or Washington wants you asking, why does every global financial crisis, no matter where it starts, end up making America stronger? Inflation eats your savings. Debt follows you everywhere. Jobs feel temporary. Prices feel permanent. And yet, somehow, the US dollar survives, thrives, dominates. What if that pain you feel isn't a policy failure, but collateral damage of a system designed to feed on global collapse? Because history shows us something terrifying. Empires don't fall when they're weak. They fall when their financial illusion breaks. And America? It learned from every fallen empire before it. What if the real superpower isn't missiles or soldiers, but control over who gets money and who suffocates without it? Stay with me. Because once you see this machine, you'll never look at recessions, bailouts, or emergency lending the same way again. Quick check-in. Where are you watching from? Drop your country below. And if you want the unfiltered truth they won't teach, hit subscribe now. Because this story only gets darker from here. Every empire that ruled the world believed it was different. Spain thought silver from the New World made it invincible. The Dutch believed trade dominance guaranteed eternity. Britain trusted its navy, colonies, and the pound sterling. They were wrong. But here's the critical detail most history books gloss over. They didn't collapse because they lost wars. They collapsed because their financial systems outgrew reality. Let's take Britain. By the late 1800s, Britain was the center of global finance. The pound sterling was the world's reserve currency. Trade contracts, shipping insurance, international loans. Sound familiar? Britain printed claims on wealth faster than real wealth could be produced. Debt piled up. Speculation exploded. Colonies became financial extraction zones. Then came World War I. Britain borrowed heavily, especially from the United States. By 1945, the illusion snapped. The pound collapsed. The empire dissolved. The reserve currency crown quietly crossed the Atlantic. Now here's the part they don't want you to compare. In 1944, at Bretton Woods, the U.S. didn't just replace Britain, it rewrote the rules of empire. Instead of colonies, America built financial dependence. Instead of gunboats, it used credit. Instead of conquest, it offered stability. Fast forward to 1971. America abandons the gold standard. The dollar becomes pure belief. Critics said, this is the end. But it wasn't, because America did something no empire had ever done before. It turned its currency into the oxygen of the global financial system. Oil, priced in dollars. Trade, settled in dollars. Debt, denominated in dollars. Derivatives, collateralized in dollars. Every nation now needs dollars. Not to grow, but simply to survive. And here's the modern parallel no one wants to admit. The more unstable the world becomes, the more desperate it becomes for dollars. Crises don't weaken America. They activate the machine. Up until now, this story sounds like dominance through inertia. But here's the twist. America didn't just benefit accidentally. It engineered a backstop so powerful that no rival can escape it. Hidden behind boring headlines like liquidity facilities and emergency stabilization is the most aggressive financial weapon ever created. Not bombs, not sanctions, dollar liquidity control. And the key lies in a market most people don't even understand. A market so large, so opaque, that regulators openly admit they can't see it. The derivatives market. Hundreds of trillions of dollars in bets, interest rates, currencies, defaults, swaps. Every major bank, every major government, every major pension fund, all tied together. Here's the problem. When derivatives break, everything breaks at once. So the world built a secret safety net. Not global, not democratic. American. Because when foreign banks face dollar shortages, they don't call their own governments, they call the U.S. Federal Reserve. And that's where the story flips from history into conspiracy-level reality. Because the receipts show exactly who holds the power now. And trust me, you won't believe the name. Let's simplify the monster. The global financial system runs on debt. Debt runs on interest. Interest runs on trust. But modern finance added something toxic. Leverage. Banks don't just lend money anymore. They bet on loans. They insure bets with swaps. They repackage risk into derivatives. As of recent estimates, the global derivatives market exceeds $600 trillion in notional value. That's over 6 times global GDP. This isn't money, it's promises stacked on promises. And here's the fatal flaw. Over 80% of those contracts are dollar-based, meaning when panic hits, everyone needs dollars at the same time. In 2008, the system nearly collapsed. European banks alone were short over $1 trillion in dollar funding. They couldn't print dollars. They couldn't borrow fast enough. So the unthinkable happened. The U.S. Federal Reserve opened dollar swap lines, quietly, secretly. No congressional vote. From 2008 to 2010, the Fed lent over $16 trillion to foreign banks. Let that sink in. $16 trillion, more than the entire US GDP at the time. This wasn't charity, it was control, because swap lines aren't free money, they're leash agreements. If you need dollars in a crisis, you obey the system that provides them. Fast forward to 2020, COVID hits, markets freeze. Within weeks, the Fed revives swap lines again, flooding global markets with hundreds of billions in dollar liquidity. Who benefited most? Not Main Street, not workers, banks, asset holders, the financial elite. Stocks soared, real estate exploded, wealth inequality widened. This is moral hazard on an industrial scale. Losses are socialized, gains are privatized. And here's the darkest part. Because the world expects the Fed to step in, risk-taking increases. Bigger bets, thinner margins, more leverage, an engineered collapse loop. Every crisis makes the system more dependent. Every bailout makes America more central. This is parasitic finance, and no rival can replicate it. China can't export yuan stability. Europe can't unify fiscal power. Gold can't scale fast enough. Crypto can't survive state pressure. The dollar isn't strong because America is perfect. It's strong because everything else is trapped inside it. This is the Global Dollar Liquidity Trap. And it explains why sanctions work, why trade wars backfire on others, why de-dollarization never fully succeeds. Because leaving the dollar means financial suffocation. Countries try, they fail, they return quietly. The illusion persists, but illusions collapse suddenly. And when this one does, the shock won't be national, it will be planetary. Here's the final truth. America will be the last superpower. Not because it's the most moral or the most efficient or the most united, but because it built a system where collapse elsewhere feeds its dominance. That doesn't make it invincible. It makes the eventual reckoning unimaginably violent. This machine runs on denial, on borrowed time, on the belief that tomorrow will look like yesterday. But history doesn't repeat gently. The speed today is faster, the leverage is higher, the trust is thinner. When confidence breaks, there won't be lifeboats, only lifelines, and America controls them. The lesson of history isn't optimism, it's awareness. Empires fall when citizens stop questioning, when they outsource thinking to institutions built on debt. So ask yourself, are we wiser now, or just walking the same path in better suits? If this made you uncomfortable, good. Share it with someone who still trusts the system blindly, and if you want more truths they won't teach, subscribe now, because the next chapter of this story is already being written. Where will you be when the illusion cracks?